Hello, reader. Oak Bloke here. I'm going to talk about energy fuels today, and there's quite a lot to cover in this one. But this is one of my 25 for 25 ideas, and I thought I'd start with just kind of going through the background of this and the kind of the various arguments, counter arguments, and just sort of set some context, and then dive into the idea itself. I actually didn't know anything about energy fuels until last May. Um, and what happened last May in this article, the Buttery Biscuit Base article, that there'd been that an offer had been made by Energy Fuels, a company called Energy Fuels, didn't know who they were, to buy base resources. So anyway, I at the time looked at it and I said to readers, well, consider that this Energy Fuels, whoever they are, uh, their share has traded between $5 and $10. Um, uranium is sort of at the time uranium was sort of going between 90 and 110. That there's near term supply, speculative buying. Various people speaking of the virtues of investing in uranium. There was also this, where there was the ongoing Ukraine-Russia conflict and the sanctions that have been placed upon Russia. Now, sanctions were placed, but then with exclusions, so they're kind of sanctions that aren't really being enforced at this time. But that's an ongoing um, kind of question mark. And of course, I'm recording this on the 16th of January, and President Trump, um, President-elect Trump, I think he is until the 20th, takes power in a few days. So what will happen post 20th of January again is up in the air. So yeah, the background to this was that I then started to look at uranium and to look at the uranium market. I'd previously looked at it from the point of view of yellow cake and YCA and a couple of things like that. But because in the UK there's not really very many ideas where, apart from those funds where essentially you're just buying a stockpile of the material and then you hold it in the expectation or hope that prices will go up one day. And generally they are trading on a discount. And in fact, I had a very interesting conversation with a reader where they had written an article about yellow cake YCA, and yeah, just it was interesting because I could see an upside, but I just kind of compared to energy fuels, I said no. For me, like, energy fuels allows you to stockpile ore and do what yellow cake does, but this is an actual producer. Plus, there's all the other minerals. We'll come to that anyway. Yeah, I looked at it, and the deal itself looked really good actually, because they were offering to buy base resources to, essentially it was about 10 cents of per share of cash, and then you had energy fuels shares on top. So um, at the time I said, well, look, this looks really good, and I myself went for it. And in the fullness of time, I think I've had a nice tasty slug of cash, and then the cost of my base. And actually this was the disconnect, because I said, well, you get 0.026 shares in energy fuels that's priced at this price, so it's almost like a free ride on this. So now I've got um, energy fuel shares that I think they're about 15 to 20% below my buy price. So I've, plus I got a big chunk of, so I've made about 50% on the initial idea from last May. Anyway, um, this was and yeah, the key thing of base resources, and why I was invested there was because of its Toliara project. Now, at the time, it had Quale, and Quale was chucking off lots of cash. I received some really great dividends. So I've kind of seen how cash generative how cash generative the heavy mineral sands can be, and that's obviously linked into then other ideas like Kazira and uh, um, that I've kind of looked at the similar economics. So, but what really caught my eye was the idea that not only is Energy Fuels a uranium miner, it's also a uranium miller. So it takes the ore and turns it into what's called yellow cake. So it's a refiner as well as a miner. So it's got that value add activity, and they're the only ones in the USA. And right now with uh, Trump and that whole reshoring piece, to my mind, that's a vastly strategic asset, a vastly strategic capability. I mean, yes, the Canadians have got similar, but they are in Canada and not in the USA. There's other places in the Western world, but this is the only one in the USA. I mean, Cameco or Cameco, however you pronounce it, they've got their facilities in Canada. Um, so yeah, we'll come on to them in a little bit. Anyway, the IRR on Toliara was just far in excess of Quale, massively higher, 79% IRR, and that's based on um, quite conservative assumptions. I mean, it's not like 79% is yeah, pushing the boat out. And actually, when you actually factor in the monazite component, so again, we're going to come on to that, the that the NPV value of 2 billion when you're looking at a capex of 610 plus this cost here, so 681, uh, pretty impressive economics. So yeah, it all looks very good, and you can see here, you got the dividend, you've got the shares. And at the time it was at the time it was 13.5 when I wrote the article. It actually dropped down, I think, lower than the 13.5 to about 12 pence, I think. So yeah, really good deal. But that's all kind of gone, and now base is no more, and all the shares are now Energy Fuels. So this is the background to it. I then wrote an article in August where I sort of, having sort of bought into the idea of base, and then the base deal was approved, finalized. Um, so it was concluded. I then sort of looked at this whole question of uranium demand, and this, for example, is the World Nuclear Association. So the black line is uranium demand. These very various colourful lines are then the supply, and we can see here, there's a big difference between demand and supply. So demand is outstripping supply, um, but of course we can see, in the past, that supply has massively exceeded demand. So I guess the question here is, well, are we going to see supply vastly increasing? Are we going to see demand leveling or increasing? What's going to happen here? And various people come up with various ideas on this. This is what, again, the one of the commentators say are the increases to production over time. So the growth rate is about, between this year and 2030, they sort of saw it as, there's 10% growth this year, dropping to 5, dropping to about 2% by 2030. So a slowing supply expansion, and it was interesting. And then the other factor here is that, of course, you've got new nuclear facilities, but then you've also got existing nuclear facilities, and the age of those is actually quite. It's surprising how old a lot of nuclear facilities are. So there's a lot of 30-year-old, 40-year-old, even 50-year-old facilities where the government, that whichever national government have extended the life, and we can see that in Britain where we've had a lot of extensions to beyond the expected lifetime of nuclear power plants. So retirements are a negative factor to demand. Additions are a positive factor to demand. So we can see, that we've got sort of a 25% increase in terms of cap- um, capacity to 2030, and then the predicted additions, net additions of retirements, then kind of take us to about double by 2050 is the now that's what they call the high case, because of course it may or may not happen, and then the low case is that we have sort of by 2030 just virtually no net growth, and then by 2050 virtually no net growth. um, and that's the low case. So quite a range of outcomes. And I guess you've got to look at what's going on in the whole world of energy. I mean, um, I've uh, looked at the numbers around wind energy and solar energy. I've got no particular axe to grind, but I did sort of comment where I think on X, where somebody said, the comparative cost of wind is 9 times higher, and I said, well, looking at the numbers, I can't see, and yes, that's true, but then you're comparing against US gas that's 5 times cheaper than UK gas. So, like, half of the difference is just the fact that US gas is insanely cheap. And then, there's other factors as well. I mean, if governments have agreed a floor price to subsidize production, which in the past they of course did, then wind energy is expensive because it's subject to subsidy. And you've got CFDs, contracts for difference, where essentially to kind of persuade somebody to go and build a big wind farm, especially 10, 20 years ago, well, yeah, you did have to say, look, I'll guarantee to pay you X amount over the next 20 years, 25 years, in order to make the whole project worthwhile, to guarantee the income. But there's wind farms being built today that have no subsidy. So what does that tell you? Again, it just to my mind, common sense tells you that if there are unsubsidized wind farms being built, either the investor there is insane, uh, or the cost of building it is economic to kind of deliver a return over its lifetime. So as I say, I've got no particular axe to grind. I read different things, various different things about how wind is rubbish, wind is brilliant, and I've only just tried to look at this to kind of get the truth of it. That's all I've cared about. I've got no particular, and the same for uranium. I mean, at the end of the day, uranium comes with some risk, in the sense that, of course, we all know about Fukushima and Chernobyl and 3 Mile Island, and that, of course, there's that spectre. And if you grow up with that spectre of nuclear devastation, then of course, there is a negative. But I think today we've also got, the reality that we need energy. The economy runs on energy, and one of the gripes that I've heard people say is, well, cost of running your economy on predominantly wind energy is more expensive. And the more expensive wind energy, UK energy is the most expensive in the world, I've heard people say to me. I don't know if that's true. I suspect it's probably not true, but I don't have the facts to kind of say that that is or isn't. I've not looked at world electricity prices and kind of been able to validate or dispel that notion of UK, but certainly UK energy isn't the cheapest in the world. I think we can all agree on that. So, um, our current government say that it's going to deliver they're going to deliver a cheaper electricity by 2030, and they're doing that through wind predominantly. Um, all I've said in commentary is to say, well, look, this is what the government say they're going to do. I've got no particular opinion that they are going to achieve that. Other than I've just said, look, this is what they say that they're going to achieve. I do have my doubts and suspicions when you've got CFD pricing, and obviously a CFD price is a guaranteed price. So how are you going to bring down prices if you've guaranteed prices? There are some unanswered questions, I think is fair to say. But yeah, look, we all want more, cheaper energy to fuel the economy, but also I think we've also got to be mindful of, yeah, the devastation that we see around us, that you've got to be mental to not see it, or just willful not to see it, that we've got to do something about CO2, and assuming that CO2 is the reason for the environmental uh, weather patterns and things that, anyway, I'm not here to kind of talk about that. It's But uranium is a way that you can essentially have carbon free energy production, and there are a lot of things that can be done to make nuclear safer. This article from Goering and Rosenzweig is particularly interesting, where one of the things they talk about is how um, a lot of the nuclear power was driven out of high pressure water based reactors, and the reason that the world built water based nuclear reactors was to suit submarines, which of course makes sense when molten salts would be a really bad combination with water, because they would explode. So you almost have to do this based nuclear design for submarines, because it would be really not a good idea to put molten salts on board a submarine. But that's not to say that you should do it for everything. And it's very interesting that um, SMRs, small modular reactors, if they run at 1400 Celsius and run at atmospheric pressure, in other words, they're not high pressure, they are atmospheric pressure. The well, certainly what these guys talk about is that it would then require 80% less energy to build. Um, they talk about, now, this EROI is energy return on investment. So how much energy does it take to build the thing? How much energy do you get out of it? Uh, their their estimate, or their calculation, is that it would actually deliver a 180 to 1 energy return on investment. Now, today, nothing delivers that. Nothing delivers that. Wind, solar, anything. So 180 would be a massive solution to the world's energy need. Massive solution, if it's achievable. Now, um, we believe the requirement of a molten salt SMR would be 90% lower per kilowatt hour than a nuclear water pressure. I mean, that is just incredible economics. These guys, UBS, talk about levelized cost of energy. And again, I've had people scream at me about how, show me where the wind levelized cost of energy is lower. Well, I don't know. I just read things, and I read, for example, these guys, I think Lazard are a very credible source, and this is what they say. So wind onshore, that gas is higher. solar PV is here, the grey one. Coal is up here, and nuclear is up here. So obviously nuclear is the bad boy. But obviously, if we could bring that down by 90%, I mean, you're down here somewhere. You're down here somewhere. So on the basis that you've got the potential technological breakthroughs, you've got the energy need, so you've got supply improvement, you've got demand increase. I mean, these are all very positive for 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 this idea, essentially. So next thing I'd say is that yeah, I sort of wrote this article and wrote about how SMRs and that of course that some of the nuclear projects recent times. I mean, Hinkley is well commented upon, where I talked about egregious rates of £160 per megawatt hour. So I mean that is far higher than wind turbines. So that's not a way to make UK electricity the cheapest in the world. I think we we're at a point of no return where we've kind of we're 90%, some other percent there. So I think we've just got to get on and finish it off. But I guess we need to think again about having another Hinkley, in my opinion, because of course we don't. We're not going to be a successful economy with energy costs of that. I suppose it's also true to say that nuclear fuel, it's worth sort of saying, even at those efficiency levels, uh, of water-cooled reactors, energy uranium fuel costs are £4 to £7 per megawatt hour. So that rate of 160 is 156 to 153 of not uranium cost versus the 4 to 7 of uranium cost. Okay, so the fuel cost is modest. It's a few percent. So if uranium doubled in price, would demand go down? No, it's pretty completely, almost perfectly inelastic. That you'd have to kind of, even if uranium 10 bagged to 800 a pound. That would be nice. We're still only talking, that would sort of add, from that would add about 20-25% to the costs of fuel, to the overall costs of in other words, it's a very immaterial cost relative to the capital costs, which potentially could be massively coming down. So anyway, just sort of seen as well, the Kazatomprom is a large uranium producer, and these guys talked about the challenges around sulfuric acid and how they believed that Kazatomprom would announce cutbacks in their production, and these are based in, as the name suggests, I guess, Kazakhstan, and of course. Russian troops have marched into Kazakhstan to quell riots in recent times. So yeah, there's various reasons why you'd feel a little bit dubious, nervous about relying on production from Kazatomprom, from the point of view of sulfuric acid, but also from the point of view of political and various different things. So yeah, I sort of saw that. I then talked about yellowcake a little bit. So but they get a lot of their supply from Kazatomprom, so there is sort of some pluses there. Energy fuels. So I kind of did a compare and contrast. Energy fuels by comparison. So you've got the uranium story, but you've also got the rare earth story. So as well as being able to produce uranium yellowcake, they've also proven the capability to produce rare earths. So they've worked through the processing to produce neodymium and praseodymium. So that's something they've got proven capability over, but also the ability to produce vanadium. So vanadium and uranium naturally occur together. Some of Energy Fuels mines are both uranium and vanadium. So there's I mean at the moment vanadium is at a very low price, but are we going to see a reversion of price in 2025? It's almost very highly likely because it's at a record low to the point um, where vanadium mining is a loss-making activity. And in actual fact, Energy Fuels are just stockpiling their vanadium ore, and they've got some vanadium finished product that they're just holding. They're holding for future price rises. And then the final part to the Energy Fuels story is this medical isotopes. So medical isotopes is, again, it's a very um, large and growing area to treat cancer through what's called alpha therapy. So again, that's part of the story as well. So this kind of then brought me on to just coming through, working through the existing numbers. So these were the existing numbers, and then sort of looking at their plans and looking at their planned increases to production, which, as you can see here, was to kind of move to 1.1 million pounds a year, to then move to 1.4 million pounds a year, to then to move to 2 million pounds a year, to then long term move to 6 million pounds a year potentially. But as well as the uranium increase of production, which of course is dependent on uranium prices and also contracts, because you have contract price and spot price. There's also another separate story of the rare earth production. Okay, so again, there's a ramping up of that, and then separately, you've also got the the other rare earths, which are these down here, and then on top of this, I mean, this was based on $85 uranium, um, which you know, obviously you can take your view on that. But when you've got $36 per pound uranium costs, I mean, there's obviously some margin to be made there. So that uh, and this diagram kind of sets the stall of Energy Fuels. So you've got these different mines in the USA. They've also then got a project which is quite early stage in Brazil, Bahia. Um, uh, Quale and Toliara, which at the time were potential, are now part of the story. And Donald over in Australia as well is a joint venture, which is monazite and heavy mineral sands as well. And yeah, so at the time it was an 800 million market cap. The offer it was making, kind of because it was a share buyout, it sort of put itself at sort of eight to 900, and the NAV or was 382. So the net assets don't equal the market price. So you're not buying this because the assets are the price to book's about 2 times, or was 2 times. But the thing that was very interesting was the rare earth story, the uranium story, and so on. So shortly after this article, another article came out which said, uranium prices are going to drop. The Canadian production is going to vastly increase. And all of this was quite sort of different to the World Nuclear Association and different sources. So I kind of looked into this and looked into what 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 was Kamiko kind of was there this doubling of production or increase of production, and when I read their investor relations pages, it seemed to be that no, actually we're in discussion. This we're considering an increase, but we're evaluating it. So there was no decision to actually increase production, um, to extend Cigar Lake and to extend, and it just didn't make sense to me when, if the outlook is so bearish and terrible for uranium prices, why would you go and spend hundreds of millions on a project to expand your production? It didn't seem to make sense to me. There was this, which was an extension of the life, so that wasn't increasing the production; it was increasing the mine life, which was a different capex. And yeah, when I looked at their plan, they uh, there was no plan of increase that I could see. So Kamiko was delivering zero, as far as I could tell. I also noticed that when I looked at their accounts that that they'd burned through a lot of cash, that their cash pile had dropped. I mean, it obviously wasn't zero, but are they going to borrow money to fund this supposed increase? And then we then had Kazatomprom, and again, having read this article from Go Rosen that said, that there was going to be difficulty and problems with the sulfuric acid and with production at Kazatomprom, and they expected even more cuts to sort of follow in the future. Yeah, so again, that didn't seem right to me. So when I looked at it, I sort of saw that what was being argued was that the secondary supply, which is basically just sort of stock that's available in the market, stockpiles, would cover the deficit, which is what it's doing. And of course, there are a lot of stockpiles of uranium. The problem, though, is, well, how do you know that those stockpiles are available? And the answer is you don't. The whole thing's completely opaque. And it was interesting because I started to look at, well, could it be that you get stockpiles out of decommissioned nuclear weapons? So that's or from uh, MOX, which is reprocessing of spent uranium, or sorry, spent nuclear fuel. The answer again was sort of, well, no, not really. And so I then looked at the retirements versus the additions to just again sort of see what where the whole thing went to. So I kind of came to the conclusion that some of the increases, that this is Kamiko Canada, these were not going to happen as far as I could see, that this increase, this doubling of production, um, by 2028, with a country that's in the midst of a war. I just like, really, I just don't believe that that's going to happen. I found that increase and doubling of mine supply out of Ukraine to be I, 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 I was very skeptical, should we say, about that. Um, so yeah, again, I then listened to people like this guy from Sprott who said, "Well, look, yeah, we've got a stockpile, we've got an ETF, but no, we're not going to just sort of sell our. So we're part of that secondary supply, but no, our secondary supply is not for sale. Like if somebody knocks on our door and says, "Oh, yeah, we'd like to buy some of your," well, no, it's not for sale. You know, we're holding for better prices in the future. So, like this whole thing of like, well, yes, there's just this available supply. I couldn't find evidence to that. So I kind of said, well, you know, there's lots of reasons to think that prices will go up in the future. Now, the reality is, since I wrote that article, which was here, like 83, it's gone down by 10. So it has gone down. It's true. It's interesting though, because then you look at, like UBS forecasting higher supply from, these are Australian producers. They're um, uh, forecasting higher supply. So I looked at that, and you know, the UBS point of view is to say, well, you know, nuclear is expensive, and you know, there's very little you know, near-term reasons to be optimistic, but longer term, medium term, you know, the brighter future, SMRs, but you know, these are not going to be around till 2030. So it's true that there's not sort of a vastly bullish perspective from UBS. Um, but when you look at, well, what's the forecast position on uranium? Well, trading economics say, you know, we're still looking at it reverting upwards. So that's not changed. Um, some of the things here, you know, the Kazatomprom due to raise production despite struggles. I mean, the jury's out on that one. The jury's out on that one. It's interesting. I looked at Kamiko again. Um, you know, Kamiko halts production. So what? This expansion, this expansion has now turned into contraction, and that's sort of a few days ago. Um, so so I don't know. I kind of look at, you know, my original thesis of, well, the demand is there, the supply is not there. And all I see is that the supply is increasingly not there. You know, that when you're halting production, when you've got Kazatomprom that's got problems with its sulfuric acid and its ability to grow and ability to um, you know, meet. I mean, it failed to meet its production expansion targets this year. There's no guarantee that it will meet his expansion targets. Sorry, last year it didn't meet them. There's no guarantee that they're not going to turn around and give more of the same this year. So, um, you know, delays at Inkai could impact because that you know, the production outlook contributing to market tightness and higher uranium prices. So yeah. Anyway, I need to move on because I'm conscious that this is now at 37 minutes. So anyway, background, I guess, is to kind of bring me to the article itself. So um, when I wrote this and included it in the ideas, I kind of thought, you know, like, okay, again, this is a long-term idea. This isn't necessarily, you know, the high point is going to come on the 31st of December 2025. So from a 12-month perspective, I mean, I'm bullish, but from a long-term perspective, I'm even more bullish. I guess what I'm kind of looking forward to in 2025 is higher uranium prices. If we look at our friends UUUU, what we can see is that as the uranium price has come down, so if we kind of take the 6-month point of view, so that is August, so we can see that it went from 4.5 to 7 to back to 5. So you know, we've kind of started the race, the 2025 race, at a low point. Am I expecting it to kind of go back up towards 7 to 9 to 10? Yeah, absolutely. So let's kind of talk about why. Um, so yeah, I mean, I've kind of talked about demand, I've talked about supply, so I'm not going to kind of repeat myself here, hopefully too much, but some of this is just background to kind of the use of uranium, which was actually quite interesting. So I guess bullish, strong fundamentals. So Energy Fuels itself has got a strong balance sheet. So it's got stocks of uranium, it's got stocks of vanadium, so it's got sort of stocks available to sell. It's mining and producing. It's not an explorer. Well, it is exploring, but it's a producer and a refiner. So to my mind, you know, the whole Donald Trump um, new presidency is very bullish. I think that we're going to see a lot of news during 2025 about SMRs, and to my mind, regardless of whether it's going to take until 2030s, from what I've read, an SMR is about a 3-year build cycle. Um, so are we looking at sort of a decade until these things are built? No. I think it kind of depends on how, you know, like, let's think about this. Donald Trump is all about deregulation. Donald Trump is keen on increasing energy. I think it's fair to say, drill baby drill is kind of code for, produce the energy because the energy drives the economy. So are we going to see some SMRs being fast tracked in the US and elsewhere? I think so. Will it be the 2030s until they're built? I think that's quite pessimistic. I could see um, so to my mind, if we see a build program coming out of the US, we see a build program coming out of other countries, including potentially the UK. The UK government are evaluating SMRs, as I've said in an article. So there's as I say, the growing demand is definitely, to my mind, there, and the supply is not there, but the supply would and could increase in response to higher prices, including energy fuels could respond. So the nice thing about this, though, is that you're not reliant on just the price of uranium. I know I've talked about a lot about the price of uranium, but you've got the rare earths. So rare earths again are at a low point at the moment, but the outlook is strong. Rare earths are controlled very, very strongly by China. And if you've watched my Macango video, which is also rare earths, it's another rare earth idea, you'll know that there's 92% control of rare earth refining. So the fact that these guys can produce rare earths, that they are part of the 8%, therefore, of non-Chinese production. Heavy mineral sands again. I've seen a commentator talk about a shortage or a forthcoming shortage in titanium. When I looked at that, I couldn't see that was going to happen. That was in relation to Kazira. Someone said that there was a forthcoming shortage. I've seen no evidence to that. If we look at the forecast for so the broker or the analyst who said, "Oh, there's this forthcoming shortage of titanium," not sure that's correct. Not found any evidence to that. But generally, I mean, rare earths and the rare earths coming out of Toliara. I talk about it in this article that there's some really great, really strong economics. But the bit that kind of is the fall off your chair bit here, and I'm sorry it took until 43 minutes into this video to kind of get to this, is that inside heavy mineral sands are rare earths, but inside heavy mineral sands is uranium inside what's called monazite. So, so the bit, the bit that currently is a pain in the proverbial for heavy mineral sands, and it was for Kazira. The whole sign off of the production was delayed by 5 months, I think it was, until the South African radiological folks signed it off. Monazite is radioactive, and that's a problem. Now, the fall off the chair bit, and I'll kind of come on to it later in the article, was that, well, the levels of uranium at Toliara are fantastic, fantastic. So anyway, let's kind of get to that hopefully. So it was also the case that these guys have not only acquired, there's the Donald in Australia, there's the Bahia in Brazil. So they've got various sources of of heavy mineral sands, which will deliver rare earths and uranium. So let's move through till So these are yeah. So I talked a little bit here about energy fields. So there's two types of uranium mining. There's hard rock mining, and then there's what's called ISR, which is using the sulfuric acid to basically you pump it in and then you withdraw it out. So it goes in via one and comes out via two, and you recover the uranium. I think it would be uranium salts, if I'm not mistaken. I might be wrong on that, but this is a plant, a production plant that's going to come online in 2026, and that will deliver a really big. So this is the Nichols Ranch ISR um, plant. So there's various different different productions, but yeah, this for me was very, very powerful. So, even if the uranium story is a complete non-starter, which I don't believe is true, but even if that is the case, then this monazite production, so that rare earth grade is fantastic. I mean, no two ways about it. Of which there's kind of a really, really good level of the NdPrs and the DYTBs, I'm not even going to attempt to pronounce them, but yeah, some really really good, really really good economics, really strong IRR as we've talked about, um, that would generate 300 to 400 million dollars cash flow for 38 years, and that's so that 2 billion net present value. I mean, we're kind of talking, over 7.5 billion of free cash flow, or up to 7.5 billion of free cash flow. So that's why I say, like, you could even say uranium's gone to zero, and this would still hold value. That in the sense that this project alone is worth the value of energy fuels pretty much. And the bit that I guess was very interesting was that they proved that they could take 480 tons of monazite. Now they took it from a place called Emmaus, um, and then they produced 38 tons. So out of that, they produced that. So they got sort of what, about 9%. So, and they expected to get 25 to 35. They actually got 38. So it was above expectations in terms of the rare earths they were able to successfully extract from heavy mineral sands. So really, really positive. And then the bit that shocked me, I thought, wow, was that within the Toliara monazite, there's 3,190 parts per million, which is 0.32% uranium. So when you consider that, well, how many tons of HMS are there? Well, it works out that well, sorry, I'm not going to spoil the surprise, but yeah, sort of works out at a tremendous amount is the short answer. There's also these projects as well, as we've talked about. There's also the medical isotopes as well, and again, hidden away in the value of this company is Radtran, which they acquired last year, and that's a company that specializes in the separation of radioisotopes. So, I mean, Energy Fuels are not the only company going after this market, but um, when you're the producer of the raw material and you're the guy that can separate it, and you've got proven capability around separation of radioisotopes, I'm pretty optimistic that they've got a good chance of winning in this market. So they are putting energy into um, addressing radioisotopes, and it's interesting because these radioisotopes are increasing in use. I think I included an article somewhere where I said, that the UK are talking about spending 400 million building their own facility in I think it was in Wales to produce radioisotopes because the UK doesn't want to rely upon being able to import them from abroad because of price and different things. So I guess I talk about different things here. So I just want to move to and the vanadium was then the other aspect to this, that vanadium at the moment is very inexpensive, but that price was many times higher a few years ago. So will we see higher prices again? Quite possibly. So anyway, I started looking at the numbers. I looked at them before, but I looked at them again. I looked at the past numbers, which are these numbers we see here. We see, and of course you see a lot of red ink here, red ink, red ink, red ink. But a lot of this red ink is essentially, that the production is not um, geared up yet, and that they've swapped over from. You can sort of see it here, producing rare earths for a while, producing vanadium for a while, producing uranium for a while. So it's one line, and they've been sort of swapping it out, doing different things to prove. So the past story is one of investment into know-how and capability, pretty much. But when you look at the forward picture and the production lines, and this I think is largely the same as the original article, so I won't spend more time on this particularly. Um, but yeah, when you start to look at, like, is $50 a kilogram conservative? Is uranium at 80? None of these. I don't think any of these prices are particularly aggressive. That this 500 was pretty conservative. That I think in Makango's case was the future price, I think I said, was, and this was based upon an analyst forecast, uh, Adamas, I think it was, that was going to move to 70, 80. So, I mean, you can see here, like if that moves from 50 to 80, I mean, you're looking at another 40 million profit straight to the bottom line. Through a higher selling price of NdPr. So there's, I don't think any of these numbers are particularly aggressive, but even, let's kind of consider these. And this is sort of not including Toliara. This is just the US. So doesn't factor in anything for radioisotopes, anything for Toliara. Oh, well, Toliara, anything for Bayer, anything for Donald. Um, this 70 million, 40 to 70 million profit on a sort of 700, 600 million. Sorry, let me just go. Uh, yeah, so it's just over a billion dollar market cap. So we're talking, a PE of about 15 times, 15 to 20 times, in the reasonably near future. So that's kind of 2 to 3 years from now, and that is before we even consider any of this. And when we consider that prices are likely not to be $50. So yeah, very conservative assumptions. This bit here was all of their different mines. So I looked at the resource grade, I looked at the production or the forecast production, I looked at the forecast or the vanadium capability. I looked at their resource. I looked at their proved probable, the M&I measured and indicated. So you've got about £100 million of known and probable and indicated uranium. So £100 million, and then £28 million of vanadium. So the resource again, like, okay, yes, it's $1 billion, but you're I mean, just roughly there. I mean, you're paying what, $8 a pound, just for the uranium that you can sell for 73 today, and that costs you 35 to cost of production. It's again, even if you only value this on the the uranium in the ground. I mean, you you know, and then you've got to say, well, plus all the other things. So yeah, but when I worked out that the uranium at 0.32%, which I talked about earlier, over the lifetime, I mean, based on annual production, I mean, you're looking at greater than um, you're looking at 166% of their 2026 targeted production of £6 million. So you know, if they can pull this off, the amount of uranium they're going to get, which is a byproduct, which is something that people throw in the bin at the moment, or I mean, I don't mean that literally, but whatever the radiological folks in South Africa and elsewhere tell Kazira to do with their monazite, but they're not selling it. They're disposing of it somewhere somehow, and these guys on the comparison are turning it into a product that they can sell. And then you start to think, well, hang on, if there's all these places like Kazira and elsewhere in the world that have all this monazite that they've just got no use for because they can't turn it into nuclear fuel, well, I know a man who can, so to speak. Anyway, um, I then looked at the different three different projects, and this is what we know. We know. So monazite is vast in Toliara. It was very, very low actually in Donald, but they had some very, very good levels of titanium. So that's that, and then obviously the ilmenite. But this is kind of what we know about, and obviously there you can see 5.8 billion tons at 3.2%. So it's, you know, the monazite wasn't as impressive as Toliara, but Toliara's is just very impressive. I mean, that at the 0.32% is just a vast amount of potential for uranium. No other way about it. Oh yeah, sorry. Yeah, this was the article that I got from the BBC. That there's a lack of medical radioisotopes available that's used for diagnosing cancer. That was it 130,000 are used. So but it's used as a treatment for early stage cancer, but it's also used to detect um, cancer, which was interesting. Anyway, so again, you know, very, very positive, I think you could say here. And that kind of brings me to the end of this article. So we're almost at an hour. I do apologize. I did mean for this to be a much faster video, but it is what it is. Hopefully spending an hour watching the Oak Bloke uh, rabbit on about his thoughts around the world of uranium, of rare earths and vanadium, and the opportunity at energy fuels kind of makes you think, you know, just like I did that. Yeah, you know, I just see that this is a great idea that has got a vast, no pun intended, runway. Anyway, that's enough from me. Thanks for watching, and I'll be continuing with other Oak Bloke 25 for 25 ideas in due course. Cheerio for now.